Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. That certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon, with 2 locations in San Francisco and 1 in Marin. And today, for whatever reason, we decided to have a trivia theme, baseball numbers. So we'll see how well our guest does here, because our guest in the I was gonna say in the studio, in the Zoom studio, but actually he's in Ireland, and his name is Stephen Flood from Goldcore, and we're going to discuss gold and silver for our portfolios. Stephen, welcome to The Best of Investing.
Oh, it's so great to be here. Thank you for having me on.
You're very welcome. So first, let's start off okay, you're in Ireland, but you've opened up a California office in Irvine, right?
Okay. That's correct. Yes.
So let's get to know you a little bit. What's your day job?
So I'm the CEO of Goldcore. We are this is our 20th year of operation, believe it or not, which makes me sound old, but I don't feel old. We specialize in the provision of precious metals for investors, and we have, I think, over 3,000 5-star reviews. We interface with all the biggest mints in the world and biggest refiners in the world, and we produce only the highest. We work with only the highest quality products, investment grade gold. And our clients typically, they buy precious metals because they're worried about the monetary system, they're worried about risk, they want financial insurance, and then they choose to either take delivery of that metal where we ship it to them, or they, in most cases, they actually store it in vaults, which we manage for them. In various different countries around the world, one of which would be Zurich in Switzerland, sure. And also London, Dublin, Singapore, and all across North America.
Now, if somebody leaves let's get into that for just a minute.
Yeah.
So if I buy gold bullion or gold metal from you, I can have it shipped to me, and then I can pretty much put it in my safe deposit box or under my mattress or whatever. Or I can, quote, leave it with you, and it'll be in the safekeeping. Is it insured for losses? Like, I don't mean whether gold goes up and down, because that's going to happen, but like if it gets lost, or someone breaks into the safe in Dublin and gets it, you know what I mean?
Yeah, a lot of our clients don't like the idea of having so much valuable holdings at home.
Yeah.
Or even in safety deposit boxes, because exactly. You're not sure who's got the safety deposit box next to you and what's in there. So you got to be careful. So they don't want, they might want some at home, a little bit, some gold coins and gold bars, but the majority, the larger sums, tend to be professionally stored in vaults. And what's really important is this gold does not sit on our balance sheet. So you'd have no risk to Goldcore. It's actually on the client's balance sheet. It's as if they park their Ferrari in our car garage. We're minding that car for them, but we don't own it. We don't get to drive it. It's their car always.
And then is there is there insurance on it, or because eventually at some time they may want to sell the gold if they think it's gone up to enough.
Yeah, absolutely. Right? So every year we have auditors who go in and they assess what's held in the vault, what we think should be held in the vault, what they see as being held in the vault. And they produce a 3-way reconciliation showing what they find in our observations. And we share that with all our clients. We also show them the certificates of insurance from brokers in Lloyd's of London. And it shows exactly what's there and the terms by which it's stored. But the big benefit is that these gold and silver holdings are held in non-bank financial institutions. So there's no bank risk. They're basically vaults, and they store, precious paintings, diamonds, and gold bars. And in really safe locations where they're unlikely to be stolen or robbed or anything like that.
Well, and if they were, there's insurance to cover it. So
there is, yeah, but like insurance only goes so far. It won't insure like acts of God and things like that.
Yeah.
But the idea is that you diversify your portfolio of investments that you have by having some gold, and then you diversify your gold by having it spread around in different jurisdictions and different vaults. And that way, should the worst come to pass, you're not all in on one location. So you have that diversification benefit.
Okay. And then we've got another minute here before we go to break.
So what do you guys act as brokers, or do you buy it and resell it? How does that part work?
Yeah, so we purchase gold ourselves as stock, and then we provide it to our customers. And we also go into the market and we go direct to refiners and mints, and we place our customers' orders there. So we act in both ways. But typically we would have a large stock of metals because we want to be able to get it out the door as fast as possible and settle it as fast as possible for our clients to reduce their risks and to make them, delighted. So we try to do that. Our best ever scenario, we were able to settle, I think it was like an $800,000 trade, and the money came in at like 12 o'clock in the day, and we had gold on the shelf within 2 hours and 15 minutes.
Wow.
And the deal was done. And
Probably
so,
take pictures of it and send it to the clients, so they can actually see it or something.
Well, yeah. Well, we actually allow the customers to get into the vault system themselves and go in and actually see their gold bars and serial numbers on the vault systems as well as our own.
All right, we're going to cut to our first commercial break here. The theme is the trivia theme is baseball numbers. 511 is a famous number in baseball. Give me two reasons. There's two specific number, or two reasons why the number 511 for different reasons is famous in baseball. Call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate, which is worth over $100. Excuse me. Again, 511 is a famous baseball number. Why is that? Stay with us. The Best of Investing will be right back. Don't touch that dial. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Stephen Flood, my special guest, to talk about gold and silver. But before we do, let's go to our first trivia question. Talking baseball famous numbers here. The number 511 is a famous number in baseball. There are two reasons, actually. And this may be tough because, Stephen, you're in Ireland. I don't know if you follow baseball. And you have to be a baseball aficionado to know this. Do you know the answer?
I really don't know.
That's okay.
So
Don't apologize. 511 is the number of wins that Cy Young has, which will, one of those, personally, I think that'll probably never get broken because you'd have to be pitching for 20 years, which is a long time, and have 25 wins per year, which is barely feasible nowadays. So I think that one's a tough one. The other one is a little bit harder. Mel Ott. That's how many home runs he hit. So anyway, let's get back to what we were talking about, gold, with Stephen Flood from Goldcore. And let's talk about the reasons people buy gold. I mean, I know everyone talks about, a hedge against inflation, and the fact, like, if, I'm in the United States and the dollar has just gotten, I don't know if it's actually gotten hammered. I haven't followed the dollar per se, but when you print trillions of dollars like we have in the United States, it's just, they call it fiat money, right? Because it's not, it's just paper. We came off the gold standard, blah, 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 blah. And you, how old are you, Stephen?
I just turned 50.
You just turned 50. Okay. So you were a little kid at the time. But, I remember, 1979, 80, 81, when gold was just going bonkers. Then it came back down again. Why is it out of fear that people buy gold?
Sometimes, yeah. Some people buy gold out of fear. I think most of our customers are students of history, and they know history tells us what political parties and powers do to monetary systems. Okay. They overpromise, they underdeliver, and they tax. And then when they can't tax, they steal. And the best way to steal is to debase the currency, and that's what they're doing. So, when the authorities come to the rescue, and they say, the bank has failed, and 92 or whatever percentage of their deposits are at risk of being lost, and the rest are covered by the 250,000 deposit limit. And then within 48 hours, they turn around, they go, you know what, we came together and we've decided we're gonna back everybody. Yeah. We're going to give everybody their money back, and people and the media spin that as a good news story. But really, what they just did is they just confiscated money from the deposit system, the banking system, and they've allocated it to people who should have known better when they put their money in a bank that wasn't being run correctly and was taking risks that no one understood.
Yeah,
And,
I
and
heard
our
a
system,
high profile, I won't name her, but a high profile celebrity who was a big donor to the Democratic Party had over $500 million in Silicon Valley Bank, you know.
yeah,
And
it is shocking. This is not capitalism.
no, 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 the one thing I thought was very interesting, and I'm very conservative. But the one thing I had heard from Barney Frank of Frank Dodd, who's definitely more on the liberal side, and apparently he was on Signature Bank's board and all that. The one thing that he said that I actually thought had some merit was the fact that if you're a fairly, let's say fairly decent sized corporation, and you have millions of dollars worth of payroll, et cetera, et cetera, it's kind of unreasonable to think that you're going to have 500 different banks that you're going to have to put $245,000 in just to make sure that that's insured. You know what I mean? So I'm not necessarily against the fact that maybe they should raise the insurance limit for that kind of situation. Does that make sense?
Yeah, no, I don't agree with the point though. I think
Okay.
it's absolutely it's wrong. If you have a risk to an institution, you do what we do with our gold holdings in those Zurich vaults. We insure them. So if I have $500 million sitting in a bank, in a single bank, that's ridiculous. First off, if I
Yeah.
had in a single bank, I should insure that. And there's plenty of ways of doing that in the financial markets. There's loads of places that will sell you insurance to cover that
Ah,
that exposure.
good
And that's
point. Good point. You're right. So that could be incumbent upon the depositor to say, I'm going to take out special insurance for that reason. And I guess who write Lloyd's of London? I mean, who else would write that kind of policy?
the other banks will write you a contract that will pay you out should an event come to pass.
Gotcha. Well,
In the
it's almost
derivative
like
markets.
well, it's almost like flood insurance, where if you're not
Exactly.
mandated to have it, and you decide, you know what, I'm going to take my chances not to have it. Is it fair for FEMA to bail you out? So
Yeah.
that part of it, that's actually a very good point. I didn't think about that side of it. So I always
Yeah,
like to
and
learn
I,
here.
I heard that point argued, voraciously on Twitter by large, tech titans,
Yeah.
and it's nonsense. I mean, ultimately, if you believe in capitalism, you believe in caveat emptor, buyer
Yep.
beware,
Everywhere. Yeah.
You believe in the power of the individual to inform and to make decisions, and not to take risks. And if they do take risks, to get burned, that if those risks turn out to be bad. So yeah,
Yeah.
I think I believe in the individual, and I believe in capitalism, and I believe that we make decisions. And when the government comes to the rescue of such banks,
Yeah.
what they do is they create moral hazard, and now other people will invest in banks and not care, and they won't care how well those banks are run. And essentially, those banks now become an arm of the government.
Yeah, now that I did think of, where if you take off the risks from the bank, they'll go ahead and make stupid decisions going, yeah, sure, we're going to get all kinds of bailout. It's funny, in the old days, we used to sort of tease about how if you're a little old lady, what you should do, and I say this sort of tongue in cheek, but what you should do is just do the riskiest investment with your stockbroker possible. If it works out, great. If it doesn't, you say, I'm just a little old lady. You guys should have known better not to put me in. Tell you what, we have to go to our second break, if you can believe that. Okay. Second trivia question. 714 is a famous number in baseball. Why? Call 888-912-1190. First caller with the correct answer wins that tanning certificate. Stay with us. The Best of Investing will be right back. Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with my special guest, Stephen Flood of Goldcore. Second trivia question. 714 is a famous number in baseball. Why is that? Stephen, do you know that one? Again, if you're not a baseball fan, it's the number of home runs Babe Ruth hit. So again, I know this one's a kind of tough week because you're in Ireland, and what's your big sport in Ireland?
Rugby will be
Rugby,
the one we
yeah.
follow.
Yeah. Well, I like watching rugby. They used to have it on TV in the United States like fairly often. It was awesome to watch. Loved watching that.
Well, the national team here just became #1 in the world, which is
Really
unbelievable. Our country,
awesome.
yeah, we're a tiny little country and we're #1.
Yeah, excellent. Okay, got to check that out. Okay, so let's talk a little bit about silver. It's so funny because again, I remember Nelson and Bunky Hunt back in the early 1980s. They tried to corner the silver market, and it got up to almost $50, and then went all the way down to like $9. And it's kind of crazy. So I kind of knew a little bit about that because I was buying some silver. I still have some of those old coins and stuff, but do you like silver as an investment also, or is gold the main standard?
Yeah, I do like silver. It tends to have a little bit more of a volatile journey than gold does. Rule of thumb, not exactly accurate, but
Yeah.
silver will move twice as fast as gold. So it goes up twice as fast, it falls twice as fast. If you're into kind of medium-term timing the market, which I don't suggest you do,
Yeah.
you can make a lot of money with silver when gold gets popular. It tends to do
Yeah.
really, really well. So our rule of thumb here is to get that little bit, spice up your holding a little bit. You might want to have 25% of your allocation in silver and 75% in gold.
Gotcha. And before we don't have to go to a break yet, but we've been talking about this for a bit, but we haven't given out your information yet. So we'll do it a couple of times. But right now, if people have questions about gold investments or silver investments, how would they get a hold of you?
So our website is goldcore.com, goldcore.com, and you can chat with us there. You can open up an account. You can email us, phone us. We have our office in Irvine there. It's manned, regular hours. And yeah, so the guys there are absolutely brilliant, and they'll answer any questions you have.
Okay. And in your opinion, why is gold, in the old days, I guess it used to have some, actual pliable value. And I was told years ago that gold followed whatever a decent man's suit cost. That was kind of the gold standards, as they say. And right now, gold's just hovering a little bit below 2,000, I think. I understand the value from the standpoint of, it's fairly rare. It's somewhat of a soft metal, so you can make it into coins. You can carry it around, but nowadays you can't really do anything with gold except for gold fillings and stuff. And maybe it's a good conductor for electricity or whatever, but what's the real value of gold? You understand what I mean?
Well, I do. Yeah, no, it's curious to people because, it's not what we think money is, but money is a unit of measure. It's a store of wealth. It's something that can be exchanged. And so as money, it's actually perfect in most respects. It's a little cumbersome to move around and transfer, but it's used by central banks all around the world to back their currencies, and with really good reason, because it's indestructible. And no matter what language you speak or what culture you come from or what time you find yourself in, you will always be able to exchange gold for something else, whatever that may be: currencies, debt repayments, food. It is unbelievably valuable, and you could put all the gold in the world into a 22-meter cube. It would fit under the Eiffel Tower. It would fit on a tennis court. It is so rare, you literally have to move mountains to get to it.
Yeah.
So if you compare that with fiat money or paper money, which you also can't eat, you find that this can be printed forever by the authorities, and where gold can't be printed, so it can't be debased. And the one thing, and you have to think about this one, so if ever you're listening to this, it's no one else's liability. So gold sits there independent of the financial system. It's not like a stock that requires a dividend, or an apartment that requires a renter,
or a bond that requires debt
or a bond
payments.
that needs a principal.
Good point.
It's no one's liability. It just sits there and it gathers dust, and it's valuable because it's rare. And that makes it unique.
Very interesting. Okay, tell you what, we're going to go to our third trivia question here. This one's even harder. So good luck, Stephen. The number 2,632 is also a famous number in baseball. Why is that? Call 888-912-1190. You have to go back to the 1990s, I believe, to figure out why this number is a famous number in baseball. 2,632. It's funny, I asked this on my sports show, and the guys got it right away. But again, if you're not a baseball fan or you don't know much about baseball, this one's a little harder. All right, 888-912-1190. First caller with the correct answer wins that tanning certificate, which is worth over $100. 2,632 is a famous number in baseball. Why is that? All right, when we come back, we also have some more questions for Stephen Flood, and also we'll talk a little bit about what's going on at Pacific Private Money. Stay with us. Welcome back to the Best of Investing. Edward Brown along with Stephen Flood here from Gold Core. Third trivia question, 2,632 is a famous number in baseball. Why is that? That's a tough one. It's Cal Ripken's consecutive game streak when he beat Lou Gehrig's consecutive games. So again, sorry, Stephen, I had to ask some hard questions this week.
That's what I was going to say. That's what I was going to say. That was going to be my answer.
That was going to be your answer. Oh, okay. Well, you know what? Then you still would be batting 333, and that's good. Okay. Two questions I want to ask you. One, what do you think about crypto? And then what do you see as the outlook for the markets in gold? So let's talk a little bit about crypto. What's your feeling on that?
Well, it's really interesting. You know, Bitcoin was the first one that came out. It's grassroots. It's a really cool, innovative technology. A lot of people looked at it, and by looking at it, they asked questions of the monetary system, and that's really where it came from. And I think that was a really great thing. I think there's an awful lot of pump and dumpers out there who definitely kind of like promote it for their own purposes. Sure. And there's a lot of naive people who buy it because they think they just hear about it often and just buy something that's moving. So it's unfortunate, but the problem with Bitcoin is it doesn't really work as a monetary asset. You can't leverage it. You can't bank it. And it's also when you own it, you inherit its history. So if you own a Bitcoin today, and then suddenly someone turns up at your door and they say, hey, that was stolen 5 years ago, you know, you're done. It's not yours anymore. The system will give it back to that person who lost it. Or it was involved in a criminal activity. Maybe you're suddenly caught up in that too. It's not like cash or gold, which can be washed for all intents and purposes.
Yeah.
So it's an interesting one. So I don't really believe in it as going to be a new monetary revolution. Remember, all money is power and all power is political. And the political powers will not let Bitcoin, you know, usurp them and take over power, because in controlling the currency, in controlling the interest rate, they control all of us.
That's a good point. I mean, because I've sort of trashed the idea of crypto just because I said, well, why don't we just start the Edward Brown and Stephen Flood crypto? Hey, it's worth millions, you know? I mean, it's just kind of ridiculous. The only thing with Bitcoin, I guess, is supposedly there's only so much of it. And again, that's where the rarity comes in, but yeah, right. Okay. Yeah. Well, let's get back to gold. What is your outlook for the markets? What do you think?
It's interesting, you know, the gold price goes up, but the gold price goes down. I'd argue it's the currency that you're measuring gold in that's doing the moving, and not so much gold. So I think the dollar is losing value all the time. The more they print it, the more loss of value it experiences. You know, if you were to go back in time to the year 2000, the median income for an American worker was $32,000 a year. It's now $36,000 a year.
Is that all?
When you go back then, yeah, 32 to 36. They haven't had much of a pay rise. But if you look at the average car, it's gone from 22,000 to 52,000.
Yeah.
It's more than doubled. Yeah. And the average house has gone from $168,000 to $446,000. So the average worker is getting killed.
Yeah.
And gold has also gone from like $250 to $2,000 last weekend.
Yeah.
So money is being printed everywhere, and we're creating instability and inefficiency, and we're also creating, most importantly, inequality in the system. And the more of that, the more difficult times ahead. I think gold does really, really well when money gets printed and inequality becomes the norm.
So why do you think gold just went all the way down from, you know, $1,000 an ounce back in the 80s to $250, like you said, to 2,000?
Well, it was around 660, I think, dollars an ounce back in 1984. Maybe I could be wrong.
Yeah, before that though, it was $800. I know it was 800 and something. I thought it almost hit 1,000.
Oh, the average for the month was about 600. You're right. I think it hit a high of about 800.
Yeah.
But it fell out of favor because everything else was doing really, really well.
Gotcha.
We're in it was like the roaring 20s, but stocks were on a roll, property was on a roll, financialization was on a roll. So Wall Street got in on the act and started financializing and leveraging up everything. And that feeds off itself, and then asset prices start to rise. So people don't want financial insurance when everything else is doing great. So it fell out of favor, and it went down to about $250. But when that financialization went global, and all the countries in the world started doing the same thing and debasing currencies, and debt loads started increasing, gold started finding a bid, and people started to turn to it.
Do you think it's going to hit 10,000 within the next 10 years?
Dollar will debase to gold to 10,000 and more in time. I don't know when that will be.
Yeah.
All these currencies are going to zero eventually.
Yeah, like the Great Reset they talk about. Yeah, very interesting. Yeah, like you said, there's only so much gold, and it's all perception, right? I mean, like, why are diamonds worth what they're worth? Because De Beers says that they are, right? The thing of gold is just, it's a percent, because again, it's not like food that you can eat or water you can drink. It's the perception of, hey, all our currencies are worthless, so the only thing we can all count on is gold, right?
Yeah. I mean, if you go back to Germany, back in the 1920s, you had the Weimar Republic, and they had to print, and their currency was used for toilet paper. It was used for wallpaper. It became worthless, and then the rise of extreme political entities, Hitler and all the like, happened. Arguably, the monstrous acts of Hitler and the Nazis probably could be traced back to the Versailles Treaty, when these reparations were put on the German people, which were unfair and destroyed their economy, leading to hyperinflation.
Yeah.
World War One, from World War One to World War Two. But so, what was the cause of that? To me, it was a monetary policy that was put upon them, and we had huge consequences. I can see, I don't know if the same thing will happen again, but the uncertainty, you could question what's going to happen.
Wow. Very good. Again, Stephen, before we cut to our next break, give out your information, because I know that there are people out there who are saying, who would I go to? Who would I talk to about gold and silver? So go ahead, give out your information.
I just want to say that gold's role is part of a diversified portfolio. It sits really well with everything else you own. You don't have all in gold or silver. Have a little bit in there, and it's financial insurance, and it makes you calm. Our details are, you can find us at goldcore.com.
Goldcore.com. Okay.
Yeah, and this is our 20th year of operation.
Okay.
And we have over 3,000 5-star reviews. We're really crazy about our customers. We absolutely do everything we can to delight them. So we also have a website. If you're not on goldcore.com, you can go to goldintheusa.com.
Oh,
and we named that after the boss, Bruce Springsteen, born in the USA.com.
Yes.
Gold in the USA. And what we have there is a guide for people who are looking to start their path of gold ownership. It's some really good questions. There's no hard sale. Some things you need to know.
Good. Well, I appreciate that you have all those raving reviews. That really helps. All right, stay with us. The Best of Investing. We'll be right back with some closing comments. Don't touch that dial. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with my special guest, Stephen Flood of Goldcore. We were learning a little bit about gold and silver. Appreciated that. No trivia question. And I did want to talk a little bit about Pacific Private Money, because we are lenders, or they are lenders. It's not my company. They're lenders, and they primarily do short-term bridge loans. So they don't really get caught up in the interest rate risk, because they're constantly, doing these loans and getting them paid off short term with, real banks. The interest rates are a little higher because they're providing a quick response when someone needs money. Best part is, so far, no investors ever lost money so far, and they've been in business for many years. They've done, gosh, I guess it was close to, I thought it was over $1 billion, but it's less than $1 billion that they did last year. And the interest rates obviously have gone up, but from an investor standpoint, the best part is on 2 of the funds, they're fairly liquid. So although there is a 1-year lockup, there's no penalty for early withdrawal as long as you give 30 days notice. So it's almost like a money market account, but you can't write checks against it. And the nice part is the principal doesn't go up and down. It's almost just like a bank account, but the interest rates run anywhere from 7 to 9%, depending upon how much money you put in, and it's all backed by real estate. So, there are some requirements, like you do have to be an accredited investor. So you have to be, have a net worth exclusive of your home of $1 million, or you make 200,000 a year if you're single, 300,000 if you're married. And the minimum investment on one of the funds is 50,000. Minimum investment on the other one is 250,000. But again, it's fairly liquid. So there are a lot of people out there who say, where do I park my money until I find my next best investment? Be it another piece of real estate, or maybe they're going to do gold or the stock market. It's a great place to park money because even though interest rates have gone up, the best I've seen for a 1-year CD was 4.5%, which is actually not bad, for a bank CD. And again, if you have over 250, you might have to be a little concerned about that. Maybe not. But this is a lot more liquid and the interest rate's a lot higher. So for more information, go to pacificprivatemoney.com and take a look at the various funds that they have. So Stephen, before we cut out here and give our thoughts for the day, any last thoughts? Because you're Stephen Flood from Goldcore, GOLDCORE.com. You can check out Stephen. He's in Ireland, but they have an office in Irvine, so they have a California presence. Any last words for us?
Yeah, no, it's been great. I think there's plenty of opportunities out there. Look at gold and precious metals as being part of a diversified portfolio, so it's a little bit in there. Over the long term, I'd look at it as a foundational asset. Like you're building a house, you want good, strong foundations. That's what its role is. And in fact, I go one step further, and this sounds a bit crazy, but if you put some money into gold and it's going down in value, the rest of your portfolio should be going up, because those same factors are driving those things up, are driving gold down, and vice versa. If things hit if the proverbial hits the fan and everything's been going down, you'd be glad you had that little allocation, 10% in gold, because it might go up to 15, 20. It'll take the sting out of the correction, and you're not going to be all emotional about your losses. You're going to think, you know what? These things happen. I'm not all in on the market. And now I actually might be able to sell some gold at a profit and pick up some great bargains. And that's really what it does. It settles the nerves, and it makes you a very, calms you down as an investor.
Fair enough. I like that advice. All right. And I'll ask you off air about this. Okay. So here's our thoughts for the day. And again, Stephen Flood from Goldcore, thank you so much for being my guest today. Thoughts for the day. So my doctor said I had the peekaboo virus, sent me straight to the ICU. And my dog accidentally ate a whole bag of Scrabble tiles. So I took him to the vet. No word yet. All right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.